Good afternoon. Welcome to my YouTube channel. Be sure to hit that like and subscribe button and turn on your notifications as I bring to you some important levels on the overall market indicators, as I like to call them, such as the SP500, the NASDAQ, the Dow, and the Russell 2000. Let's hop in. So as I mentioned in my last video, the S&P 500 is stuck, right? You might have saw the short that I did as well as the video I did on last week around the S&P 500. We've been stuck in a range between about 39.20 and 38.04 since about December 15th, 2022. We dropped into this range on the 16th and we've remained there even with additional news on last Friday with non-farm payrolls. However, I want to show you a little bit more in detail today in this video at a lower level so you can have some levels to watch above and below. But before we do that, I want to make sure I cover a little bit about the news that we thought might move the market out of this range. So let's take a look at that right now. So the news that I'm talking about comes from the U.S. Bureau of Labor Statistics, and it's called non-farm employment payroll or non-farm employment change. And that report came out on Friday morning. Now, if we just take a look at this non-farm employment change, it increased by 223,000 jobs in December. The expected change was 200,000. So this is a better than expected report that came out on Friday. So there were 223,000 jobs added in December. Also with that report, we found out that unemployment edged down 3.5% on an expected rate of 3.7%. So there are less unemployed people than expected in the month of December. So with that news, right, good for the economy that there were more jobs available as well as unemployment was lower than expected. However, that may cause the Fed to actually be more aggressive than the market's currently pricing in. So let's go back to the chart and take a look at some levels now that we understand the news that came out on Friday. So with that news on Friday, this is the candle that printed. And of course, we did see movement on the S&P 500 on Friday with that news, and that news brought the market higher, roughly about 2%. However, it still stayed inside of this range and actually closed just below it. We had a slight wick, as you can see, just above the range that we've been tracking, and then it pulled right back down at the close of the market. So we are still simply trading within this range that we've been looking at of 39.20 to about 3800 since December 16th. So let's drop down a little bit lower so we can take a closer look at that. And you can see we've just honestly just been back and forth, back and forth. However, this one did break a little bit higher and clear the top of the range. However, it closed inside of the range. If we look a little closer at when non-farm payrolls were reported, we can see that first candle in the pre-market here around 7 a.m. Central Time was very bullish, wick back down. So a little bit of action for those that were trading this. And then ultimately, the rest of the day climbed higher up into the last couple of hours of the market where it retreated just below this 39.20 range that we've been tracking. So let's jump into the levels that you can be looking for up above and below. With that being said, we'll take it back up to the 4-hour and put a Fibonacci on the move that just happened. I mentioned in my last video, 41.84, just above this previous high in December, is a broader price target or a broader range that we're looking for above us. But let's look a little bit closer on this 4-hour chart by putting a Fibonacci on from the high of December down to around December 22nd low. If you notice, we haven't quite hit the 38.2 retracement on the Fibonacci at 39.38 approximately. We've also got the 50% retracement, which is around 39.84, and then 40.30 at the 61.8 retracement. You'll see this kind of gray line in here, and I drew this last week for you in the video. This channel that we've been tracking since roughly this second point in March has held up strong. And looking at it a little bit closer, you can see we did wick out, and maybe that's, just a fake out to the top side and then came back under. So that line, that trend line is still in play, and we could see maybe it matches up towards the end of next week, early the following week, or we could get a push really high in continuation of the news that we saw on Friday. What's ahead though, we've got CPI coming out next week, January 12th. It's a Thursday. The expected print is 6.5% year over year. So when that news hits, it'll be roughly right here, about right here, maybe earlier in the day, about right here, which you can see that trend line and that 50% retracement could come into play on that date. And we might see a wick high. And I'm not saying we're going there immediately. We could come down lower to this extension around 3681. There's a few things that could happen. We could just clear out this previous low at the bottom of this level that we've been tracking at 3804, clear out that level and then go higher, or clear this level and go all the way down to 3681 possibly, which we have a little bit of previous support and resistance in and around that area. One potential area below, and I'll recap each level for you as we wrap up. One potential area just below that I want us to keep our eyes on is 3639. That is the low in June where we made a lower low. And then we also have the lower low that we made in October. So keeping this in our purview over the next couple of weeks, if we start to trade lower, that's a level that I'm keeping my eye on. But before we get to that 3639, we of course have the previous low of 3780, 3790, give or take. And then this extension that I'm keeping my eye on at 3681. So before we get to that 3639, those are two levels that I'm looking at below. So now you have the levels below, roughly about 3800. We've also got 3681 below, and then this level of 3639, which was the June 2022 low. Now above us, again, I mentioned that we could see this Fibonacci retracement level at 3938. Then we could see the Fibonacci retracement of 3984. And of course, there's 4030. I mentioned and talked about, if you didn't watch that video, go back and catch my video from last week where I talked about the bigger levels for the year that we have to get to either continue the trend that we've been in all of 2021 or break into a new uptrend. So watch that video and let me know what you think of those levels. But that's more of a broader view. We're just talking about over the next week or two, what could we see in the market? So your levels below, in recap, we've got this previous low of around 37, I'm gonna call it 3800 even, just for round math. Then we've got an extension right around 3681, and then the June low of 3639. Above us, we've got a 38.2 retracement of 39.38, a 50% retracement of 39.84, and we'll count this third level of 40.30 for the Fibonacci retracement of 61.8. So that's what we're looking at on the SP 500 with the week ahead. Don't forget, we've got news for CPI on Thursday morning, and they're expecting a 6.5% print. We won't hear from the Fed this month. However, what happens with that inflation print will probably influence what happens in February with the Fed, and will also affect how the market trades over the next couple of weeks. So that's what you have up above on the S&P 500 as far as some levels that I'm looking at, and below. And remember, these are just my levels and my opinion, so you should not take these as trading advice. But if you want to know more, click the link in the description. I have a Fibonacci workshop coming up here pretty soon. It's going to be January 14th and 15th. You should definitely attend if you want to avoid blowing up another trade account, or if you're just getting started with trading and don't know where to start, or you can't figure out why all of a sudden the trade was going in your favor and it ripped in the other direction. If that's you, if one of those things is you, You need to attend this workshop. It will blow your mind and give you the clarity you need to pursue trading for real. Click the link in the description to learn more. January 14th and 15th, this coming weekend. I hope you enjoyed this video. Don't forget to hit that like and subscribe button and turn on those notifications so you don't miss my next video, as well as shorts that I post throughout the week. Continue to have an amazing rest of your day. Have a wonderful week, and I'll see you soon.